Hi, folks. Welcome back. We're looking at Storytellers. This series is about how you should journal.
Welcome back, traders. Gonna be watching another ICT lecture today. This is gonna be his Storytellers series on June 4th. Now, in his first episode in his Storytellers, I said I was a little bit disappointed because it didn't seem that much different from the regular 2025 lectures. But here in the intro here, how it's going to be on journaling, I am getting a little bit excited because journaling and backtesting are two really important exercises that every trader should do, especially in the early years of your trading journey. So let's go ahead and get started. And before you forget, smash that like button to help support this channel.
The benefits of building a narrative, understanding bias, understanding session bias, the ideal draw on liquidity, or the next one thereof, that is built upon what I'm showing you here. Now, at first glance, it seems like it's just reviewing hindsight data. And true to form, that's what you will be doing because you won't have any idea on how to trade it, right? You're learning how to do it. So before you can get good at trading well, you have to learn how to read price well. And then you also have to learn how to know yourself and stave off all those things that are going to be problematic for you and focusing on the things that are useful. And then backtesting and journaling and logging things, very specific things. In the beginning, you're only going to be looking for one real obvious setup per day. And the more you do this, the more you journal and record yourself in your own words, ideally inside your chart. Okay, so you're going to be recording annotations, things that are salient for that given session, that given market, that day, that week, that month. And you want to try to give as much detail as you can and familiarize yourself with certain characteristics that tend to repeat. And they're all generally time-based deliveries. They're very specific PD array responses, drawing to an obvious liquidity pool above or below the marketplace based on a higher time frame bias.
Now, I'm really glad that he mentioned both journaling and backtesting. Like I said in the intro, both are really important exercises for successful traders. And you want to be a successful trader, right? So make sure you don't slack off on journaling and backtesting. Now, it sounds like I'm saying this to you, but I'm really saying it to myself. When I did the 2024 backtesting series, I really saw an improvement in my trading, but I haven't backtested since that concluded. So I'm thinking to do another backtesting series, but this time maybe backtesting a different asset, maybe S&P, maybe a currency pair or bonds, or I could do NASDAQ again, but go back 10 years or so. The point is, so I don't have a general idea of how the market performed, so it'll be a completely blind backtesting series. Let me know in the comments what asset class you want to see and what year. As long as I can pull it up on Thinkorswim, I'll consider doing it.
So daily chart here, let's go back in time and I'll refer you to Monday's Storyteller series on YouTube channel. Down close candle, bullish order block. I mentioned how we traded down into that. And I mentioned as a kind of like a foresight, looking forward to, not hindsight, looking forward to how we were going to use this order block and then send price back up. And I said, I want to see it trade to the consequent encroachment of this candle's wick or halfway point. And I said, just a rough, eyeball it. It's basically the same as this low of this SIBI. So we did in fact trade up into that yesterday. And then we traded up into consequent encroachment of the SIBI. Okay, so the two targets I mentioned in that order from Monday's analysis was delivered here today and yesterday. So I want to show you this level here, how we opened up yesterday and traded down immediately to this candlestick's high. All right, so we have Wednesday, Tuesday, Monday, and then Friday. So Friday's high, we traded down to that on Tuesday's trading, immediately opening here and trading right back down. When it does that and trades above the open, that's one of the most powerful bullish scenarios you can have when you have a bias that's leaning for higher prices, which is what we were looking for anyway. And I said, if we get outside of this SIBI, this would be the next one to draw to. And if we get really animated and use this as an inversion fair value gap, which this one can be as well, this gap here. So both of these could be used and, I guess, traded off of with a bullish inversion fair value gap aspect to it. If it does that, these relative equal highs are suspect. Okay, so I'm avoiding trying to pick a top. I saw a couple people, making comments on X saying that, my students were selling short or I was bearish or something to that effect. All you have to do is look at Monday's video and you'll see that I was calling where we're at right now on Monday. So it's delivered perfectly. So anyway, we're going to drop down lower time frames. Just be mindful that this line here is salient to Friday's high And Tuesday, we opened trade down to it immediately. And then we've seen the 2 targets I mentioned on Monday deliver. Right, here's an hourly chart. And just for completeness sake, I mentioned how this buy side of sell side efficiency was the low on this day here. And then we rallied up, came back down, used the high of the SIBI. I'm sorry, BISI rather, buy side sell side efficiency. We hit that, and then we started to rally up. And then once we went above this high, then we had immediate rebalance. That's what this is here. Look at the bodies respecting as well. And the market starts to gravitate towards what? The daily SIBI low. Okay, daily SIBI low is, again, this area here on the daily chart. So this red shaded line, red shaded rectangle in the midline here, that is going to be seen here. Here's the midline or consequent encroachment, the high of that and the low of that. So it's the daily SIBI low and the daily SIBI consequent encroachment or midpoint of that shaded area I showed you on the daily chart and have been showing you for weeks and almost 2 months now. So the immediate rebalance from that point on up to the low of the daily SIBI, that is the draw on liquidity. That was the thing I told you to look for on Monday, and it happened. And then if we can grind out a run up into the consequent encroachment, that would be it. Now, let me counsel you to recall that this week is a non-farm payroll event week. Okay, meaning that I teach my students to strive to look for setups on Monday of non-farm payroll week. A lot of people say I teach not to trade on Mondays. It's not true. If you're brand new and you're a student of mine that's not had too much experience doing it, I tell everyone to avoid Mondays unless it's non-farm payroll week. And with more experience, obviously, you can trade every single day. You can read price action and do whatever you want to do with your own model. But as a mentor, as a teacher, I try to counsel new people with less experience. I help them navigate the problematic days, because everybody thinks when they first come into this is every day is a trading day. And it is for you to lose money. And I try to look for the most advantageous days, times of day, days of week, months of the year, that type of thing, to hopefully have all the advantages and minimize, but you'll never be able to do it entirely, but minimize the underlying risks and or the adversities that plague everyday trading. Okay, day trading is not everyday trading, and professionals don't make a mind of going out there and trying to do an everyday trading event. Now, with experience, you'll be able to determine, if you're realistic with yourself and honest, you'll be able to determine if you can trade every single day. But I think if you look for a very few number of setups per week and wait for the setups to form for them, it's very liberating. And that's how I'm going into this series here. I want you to just look for the obvious moves each day and then build a narrative in hindsight about why it did what it did. In the beginning, you'll be clumsy. You'll really just be waiting on my video and the commentary I give, but it's meant for you to use as like training wheels on a bicycle. Eventually, you want to get to the point where you do your annotation, your commentary, and then watch my video and compare and contrast what you saw, what you annotated in your own journal versus what it is I'm talking about. Without a doubt, there's going to be a lot of things I'm leaving out. As I mentioned, I'm not trying to do a complete clinic on every possible PDA rate that was available, just the major draw or two on each individual day.
Wow. Every day is a trading day for you to lose money. I love that quote, because what really sets professionals apart from gamblers is knowing when not to trade. It's like poker. If you play every single hand, you're going to lose money. The professional poker players know when to fold and when to put chips in the middle. It's exactly like that for us traders. We need to read the charts and know which days will be problematic. Those are the days where we need to exercise restraint and not push the button. Paper trade instead, or just simply close the charts and preserve capital to trade another day when conditions are more favorable.
Right here is the 15-minute time frame. Now we have this buy side amount, sell side inefficiency right before we get to the daily SIBI low. It trades up into it, falls short of the midpoint, comes right back down. Look at the bodies respecting that. And then we consolidate and we start building sell side liquidity here. This is all time distortion, which is usually what you're going to get on Wednesday morning of non-farm payroll week. And then it becomes hit or miss whether or not Wednesday's afternoon trading or even Wednesday's morning session is worth trading at all. And then same thing goes into Thursday, and then finally on non-farm payroll Friday at 8:30 in the morning Eastern time, then the carnival ride unloads on the marketplace, and everybody has to reset their prop accounts or close their brokerage account, right? So this morning I was looking at this drop here. I saw all these breakers forming, and I wanted to see it take out this low here, and there's going to be a smaller 5-minute and 1 minute imbalance, but specifically a 5-minute inversion fair value gap. I used the time in an entry to go short to target that sell side liquidity. Over here, I went long to get to this level here. You saw that on X, and I'll drop down a lower time frame in a second, but I put the gradient levels on here, and you can see how we dropped down into the upper quadrant, but fell short of the consequent encroachment of this. You see, didn't take out that low there either, but it did use the consequent encroachment there, which is again very fascinating. Got down to a 5-minute chart. Same thing, that low sell side, very, very defined. And this drop here is what I wanted. I didn't get a chance to get positioned. It dropped really fast. So I had to use the inversion fair value gap. You'll see in a moment when I highlight it. But dropping down into here would be another objective. But because it's Wednesday of non-farm payroll week, I was content with getting out just below here. Now, up to this point, it sounds like just about everybody else that's a YouTuber or someone's on social media, and they'll say, "I think I took a trade somewhere here. I think my fill was here," instead of just simply showing the executions. Okay, I'm not going to sit up here and tell you I took a trade, and not show you the executions. I will never do that. Okay, I would never do that. So let's take a look at that now.
Alright, so there's only a few minutes left in this video. I don't think he's really going to say much more about journaling. All he really said is to do it on your own, annotate your charts, and then compare yours with his. Well, you can only do that if ICT is actually showing his charts every single day. Don't depend on him. Now, what you can do for yourself is like a before and after. So like before the market opened, annotate your charts, use the higher time frame, and predict what you think price could do. Your prediction doesn't have to be 100% accurate. That's not the point. The point is to work on your anticipation skills. Then, at the end of the day, after market close, first make sure you clear out any drawings from earlier. This way you start again with a blank canvas. Then go through the day, marking out any significant PD arrays you can see in order to explain how and why price moved the way it moved. Now you have a before picture and an after picture you can use to compare with. Do this every day, and the goal is to get your before picture as close as possible to the after picture. But of course, it will never be 100%, so don't be discouraged. Just try to get close. Most people won't even try doing this exercise, so as long as you try, you're ahead of most people. Now that I think of it, this is actually a pretty good idea for me to do and maybe post some videos as examples. Let me know in the comments if that's something you're interested in seeing, or just give this video a like. If I get something like 100 likes on this video, I'll know that this is something you guys want to see.
Here is the 5-minute chart. You can see here is this order block right here, down close candle, this one right here, and I'm entering on it there and running up into the daily CB low. I told you we would draw on liquidity Monday night in analysis. So the next day I do the very thing I told you I was looking for with an execution. And then over here today, this business, don't worry, this box will move out of the way, but this short is actually filled right here. And it's terrible, terrible placement if it weren't so obvious that the sell side liquidity pool was going to get tagged. And I'll show you what I mean in a moment. But then after it hits that, after I close the trade, limit orders filled, it comes right back up to the consequent encroachment of the daily CB. Bodies respect it. It drops back one more time. Look at the body staying inside of the daily CB low. But the wick does the damage of taking out that low and trading down to the upper quadrant of the 15-minute buy sign bounce sell sign efficiency that's shaded in green. And then it goes into just consolidation and just more time distortion. Okay, and let's go back in time to Tuesday's trade. Here is the inversion fair value gap that I was using also. Inversion fair value gap, order block on the discount range, volume imbalance, respected with the bodies, comes up, hits the high of it, drops back down, upper quadrant, you can see that entry right here, upper quadrant of the CB, which becomes, and when it's bullish, why is it bullish? Because I told you Monday I was looking for the low of the daily CB low. And it draws from there up to there, and I showed you that execution as it filled on X, just a small portion of it. This is the business behind all of it. And then moving on over into today, we had sell side building here. This is obvious. This is so obvious. So just remember that this level here, 21,665, that right there is based on this pool of liquidity that's forming. Scrubbed on over here, that same level. There's the fill and the drop down into that liquidity. And then a later lower run, but I was not able to hold that because this is what could potentially happen because it's not for a week. So this little area in here is a inversion fair value gap. You can study that on your own. Before we get to the open at 6 o'clock, and I may not get the video up by then. So if it happens, then, big deal. But right now I'm watching these relative equal lows. So we could drop down into that, and then I'll be interested to see if it starts to work overnight higher to the high upper quadrant of the daily SIBI.
All right, so that's it for this lecture. I don't know why ICT didn't upload this video in 1080p, but hopefully the video quality was still good enough to follow along. Now, he did go through several slides there very quickly at the end, so make sure you go back, pause, and take a good look so you don't miss anything. But I hope you got something out of this video. I thought I gave some pretty good advice on journaling, so if you like that, make sure you subscribe for more. But until I see you guys next time, safe trading.